Good afternoon. Thanks everyone for tuning in. I am Lydell Fleming and I am your real estate guy with the purple tie. And I'm here to moderate this amazing, really cool webinar that we have going on. We have a couple of very special guests from Freddie Mac, and we're really looking forward to learning about this. So just so everyone knows, this is a group of both realtors as well as homeowners that are in here. And you'll be able to chime in and ask questions. If you're not very familiar with how this works, down at the very bottom, you'll see where it says participants. You can actually click on that and you could raise your hand if you have questions, but I think that what we're gonna be doing is actually going to the chat, which is just to the right of that down at the bottom of your page, and just put in your questions and we will get those over to our guests and they will answer any questions that you have. So what I'm gonna do next is I'm gonna introduce these two for you. First one up is going to be Nora. Oh, see, I did it. I missed. Pronounce your last name for me, please.
Nora Cara.
Cara. Cara.
Yes.
See, I knew I was gonna, and I just asked you. I think it's the story that you told explaining how everyone says it incorrectly. So it's stuck in my head. Dang it, I failed. Well, Nora Gara, she is with the Affordable Lending. She's the Affordable Lending Manager, West Coast Affordable Lending and Access to Credit for Single Family Housing. Nora is I just said all of that. Sorry, I'm double reading here. She is the Affordable Lending and Access to Credit in the Single Family Organization. The Affordable Lending team is committed to ensuring Freddie Mac has the offerings to support responsible lending, that's key, responsible lending, and provide sustainable home ownership. Again, very key. You don't want to buy a house and file BK or foreclosure or anything like that in the short term. So you want to make sure that you get it in a very positive way and it's sustainable. And to improve access to credit for all borrowers. So she's actually the supporter of, she supports, the sales and lending partners to develop and execute seller plans for meeting affordable lending, community outreach, and CRA goals, which she is going to explain to us exactly what that is. And she also analyzes market data to identify trends, opportunities, and develops strategic direction from marketing information. A veteran of 20 years, thank you. What service were you in?
So you can name it. I've been it. I was an underwriter for 13 years. I was an originator for 11. I was an ops manager for 9. And most currently on the secondary market, learning capital markets and secondary. So I think I'll cover the entire ecosystem of housing.
Pretty much. And you joined Freddie Mac back in 2019, last year. And you've held positions in leadership and sales organization, production and sourcing areas in a variety of areas, including multicultural and low to moderate income segments. Freddie Mac was established itself by Congress in 1970 to provide liquidity, stability, and affordability to the nation. Residential mortgage markets, the residential mortgage markets. And Freddie Mac supports communities across the nation by providing mortgage capital to lenders. And today, Freddie Mac is making home ownership possible for 1 in every 4 home borrowers and is the largest source of financing for multifamily housing. For more information, you can visit www.freddiemac.com, and on Twitter, it's @freddiemac.com. So that is your intro. And of course, we have Lisa Ralph, and I'll read you a little bit about Lisa, and then I'll let you guys get to it. Lisa is the Homebuyer Development Manager for MPHS. And that acronym is for Neighborhood Partnership Housing Services. My dyslexia kicks in right when I need it to. She is the certified. She is HUD certified for over 10 years, experience working in nonprofit world of providing foreclosures, pre-purchase, and financial counseling to the community. In her position, Lisa leads comprehensive homeownership services to help low-income families and communities of color. That's important because especially with the Black Lives Matter movement going on right now, and help them build wealth and equity through homeownership. Now that I butchered all that, I'm going to let you professionals take over and explain to us exactly what you want to share with us. And by the way, this is one of 3 webinars that we're going to be having. And at the end of this, I'll go over and let you guys all know so you can take notes exactly when the other ones are taking place. And with no further ado, Nora.
Awesome. Thank you so much, Lydell. I appreciate asking me about my last name. Usually they'll call my name and I have no idea it's me they're calling. So thank you so much for that. As Lydell mentioned, my name is Nora Cara, and I am the Affordable Lending Manager for Freddie Mac on the West. Typically, I travel the entire country presenting and going over statistics and major education to our real estate professionals, sometimes to our homeowners. You know, I'm invited to homebuyer fairs, I'm invited to churches, and really my entire job is to educate our real estate housing professionals in regards to affordable lending, anything that has to do with age demographics, minorities. You guys will get to see a little bit of that. Today, our topic is absolutely going to be Freddie Mac's COVID-19 response. So I think Lydell did a phenomenal job talking about Freddie Mac. You know, we operate on the secondary mortgage market. So what does that mean? What does that mean to you real estate professional, and to you homeowners? Well, we don't lend money directly. We buy mortgage loans that meet our requirements from our approved lenders, our approved banks, our approved mortgage lenders, and our approved brokers. We offer an array of products to fit market needs, and with money that we receive from the lenders, when they sell us the loans, we can turn around and sell our securities worldwide. So that's very important for you to know. Borrowers, you typically go to a lender or a real estate agent. They sell those loans to Freddie Mac, and we turn around and sell those loans to investors. That's really all that means. Now, let's talk a little bit about COVID-19 and what the actual response was from Freddie Mac. Now, I don't know if many of you know, but we are under conservatorship under FHFA. So us and our partners, Fannie Mae, work tandem in conservatorship with FHFA, and we have mirrored closely our response to COVID. So the first thing we want to address is we want to protect those affected either directly or indirectly by COVID-19. So we want to ensure that the housing and mortgage industry has taken numerous actions to protect these home buyers, these homeowners. We have created at Freddie Mac the #HelpStartsHere campaign. And what it is an interactive guide for homeowners facing COVID-19 hardship. For you real estate agents and real estate professionals, lenders, title officers, anyone who works in the housing industry, if you send your customers, or if you yourself navigate this webpage on Freddie Mac, what it does is it helps homeowners understand their options. Not only that, it tells them what should they do, what documents to gather. It tells them how to identify their servicer. And most of the questions that we typically get is, who is my servicer? And the first thing that I ask or that I say is, who do you make your mortgage payments to? that is your servicer. That's who you begin with. We also love to discuss what are the options, what is out there. Is it only forbearance? Early on in the pandemic, we saw that there was a certain amount of months that we were allowed to be in forbearance, but that has changed. A lot of information from the beginning of our pandemic has changed. And I tend to say at Freddie Mac, we usually say things change daily. Well, things change hourly since the pandemic, and we have to stay afloat, and we have to be up to, the latest information and share a lot of that information with home buyers, with your book of business. And we tend to share that information with our lender partners and our real estate agents. So a lot of this webpage is extremely important for you to know. Sustainable homeownership in a crisis is our priority. We want you to stay in your home. We want to help, and that's what the GSCs are doing. Now, for Freddie Mac and the single family division, the first things that we did is we nationwide suspended all foreclosures and evictions of borrowers living in homes owned by Freddie Mac. Fannie Mae did the same. So if you are in your home, and at the time we were sheltering in place, we wanted you to have a home to shelter in. So we are still suspending our foreclosures and evictions as of this month of July. We also have additional disaster-related modifications available for servicers. So it's not just forbearance, there is also modification options. And most importantly, there's some customers that are plainly saying, I need mortgage relief. I'm impacted directly or indirectly, and we have created mortgage relief options. Who do these measures apply to? I think that's one of the biggest topics. First and foremost, borrowers who are affected either directly or indirectly by COVID-19. And what does that mean? A lot of customers say, well, my mom is sick, I'm at home, I'm taking care of my mom. Well, that person is affected indirectly, and they are sheltering and taking care of their parents. So they are someone who qualify. Borrowers who are unable to make their mortgage payments due to the hardship related to COVID-19. Now, this is the most important topic. Borrowers affected regardless of whether their property is owner-occupied, second home, or an investment property. In our 2009 market crash, we saw a lot of these servicers were really helping your owner-occupied properties. During this pandemic, we are ensuring that all of your properties, whether it be owner-occupied, second home, and investment, are all properties that we are helping with. And something to note, research has shown a lot of these families are sheltering in their second homes. Maybe some of these homes are in rural areas where they feel safe. Freddie Mac mortgage relief options include borrowers with payment relief for up to 12 months. Okay, so that is the latest information. Suspend borrower late charges and penalties. So if they are in forbearance, they will not receive any late charges or penalties added to their mortgage. Allow servicers to offer borrower additional loss mitigation options. So there's additional programs that are out there. Borrowers experiencing financial challenges are encouraged to, step one, contact your mortgage servicer, the company they send their mortgage payment to. So that is step one. And step two, explore one of Freddie Mac's workout options with their mortgage servicer, including loan modifications, payment relief, and keeping the payment the same post-forbearance period. Now, if you'd like to know if Freddie Mac owns your mortgage, it is also on our #HelpStartsHere webpage. And there is a hyperlink where you can see if Freddie Mac owns your mortgage. It's going to ask you a couple of small details, and it will tell you whether or not we own your mortgage. And that way you can navigate our webpage and see your options. Now, I love this slide. This is one of my favorites when it comes to forbearance. It has everything on there, and I tend to call it the COVID-19 relief menu. So it talks about our forbearance plan. It talks about the borrower, the hardships, Everything that has to do with unemployment, reduction in income, eligibility. A lot of borrowers don't believe that they are eligible for payment relief or forbearance. Plan requirements. What are some of these requirements for these type of programs that are going to help these homeowners? Servicer requirements. What will the servicer ask of you? Reporting. I know Lisa's going to do a phenomenal job about talking about credit, so I'll leave that to her. Now, how can we support your business with COVID-19 resources? So I think this is the important pages so that we can help homeowners and real estate professionals. The first thing is, if you're a real estate professional, please log on to our Singlefamily Freddie Mac COVID-19 resource page. As a lender, as a real estate and lender professional, this page really gives you all of the information that is out there. So it's detailed COVID-19 guide bulletins for sellers, servicers, and real estate professionals. It also has webinars that we have uploaded that we have maybe pre-recorded with some of our industry professionals. Reference documents, links to tools and resources. We want real estate professionals to, add relevant and most up-to-date social media information. What we've seen at Freddie Mac is a lot of our real estate partners are kind of posting stale information. Again, we are seeing so many news and updates, new bulletins, new information, and new ways to service these homeowners on a daily basis. So make sure that you log on here. The web link is down at the bottom if you are a real estate professional. The more information you know, the more that you become the subject matter expert in your community. Freddie Mac COVID-19 references. So I mentioned that lookup tool. This page will take you directly to it. Any seller questions, servicing questions, articles, homeowners, if you're watching, these articles are blogs with so much information, FAQs for you, information on available programs that are out there that can help you sustain your mortgage during this pandemic. Avoiding fraud blog. One of my favorite blogs talks about fraud during the pandemic. We see a lot of people reaching out to our homeowners, whether it's via mail, via email, or kind of, just sending spam information saying, you don't have to make a payment and it's not your servicer. So be careful on that. If I can suggest any relevant information for homeowners is to beware of fraud. Relief for borrowers impacted by COVID-19. It's a really great article. Again, homeowners, if you have time to read and educate yourself on what's out there. Avoiding foreclosure rescue fraud blog. That's another really great blog to read. And relief for multifamily landlords. So if we have any homeowners on the webinar today that own units, that owned investment properties, this is a really great blog for you to read. Single-family client resource page. This is another page that actually has all of our information on our loan programs. If you have home buyers who are looking to purchase during the pandemic, this is a really great resource page. It talks about interest rates. It talks about market trends. It talks about purchasing a home during a pandemic and how you can protect home buyers from, any type of fraud out there and, are interest rates going up? Are they going down? Is this a good time to buy? So this is another really good resource. Freddie Mac has help centers and national networks. So if you know anybody who needs help, who is not in our state, who you would like to give information to, we have a HUD-approved counseling agencies that partner with Freddie Mac across America. You can call 1-800-FREDDIE-MAC and we will partner you with a resource center near you. My Home. So this is a really great tool if you have home buyers looking to purchase during this pandemic. It has videos covering facets of homeownership from housing industry experts. helpful information on housing specific topics. So if there's something out there that a homeowner is not aware of or not sure of, this is a really great resource page. Again, any of the hyperlinks for these resources are down at the bottom of my slides. Our Credit Smart financial education. At Freddie Mac, we have a lot of affordable programs. Remember, Lydell mentioned CRA goals, and these are affordability goals from banks and from lending institutions. We provide very affordable 3% down programs such as Home Possible and Home One. Most of those require credit education. During the pandemic, Lisa will talk about credit, but at Freddie Mac, we have a great resource that is free to all your clients. It's in 6 various languages, and Credit Smart is 12 credit modules that helps homeowners educate them on credit. Okay, Credit Smart Homebuyer U, another really great resource. And what this does is a lot of these down payment assistance or low down payment programs require credit education courses. They require a certificate. So we have provided a free class, free of charge to anyone, for any of these down payment or low down payment programs. And it's in 2 languages now. And you can see at the bottom of the webpage, there is 3 new languages coming up by the end of the year. Translated mortgage and homeowner education documents. In 2009, there were so many homeowners who spoke various languages, and they were not aware of notes that they were signing, deeds of trust, mortgage jargon, modification agreements. So Fannie Mae and Freddie Mac, along with the FHFA, have translated over 500 documents and legal jargon into 6 languages. So if you have a homeowner who doesn't understand a document and you'd like to reference them over to a great resource page, this is a fantastic tool for you to send them to, and it guides them on what the document is, what it's intended for, and any legalities around the document. Okay, affordable lending insights. If we have any lenders on the webinar, we have some really great guide links. We have lending insights. We have articles, executive perspectives, ebooks, webinars. We want to educate you on every single affordable lender program out there. We want to educate you so that you can help more homeowners get into homes. One of the, myths in homeownership with millennials and other homeowners is that you need 20% down, and that is not the case. I mentioned earlier, we have an affordable product that only requires 3% down, Home Possible or Home One. And that is the end of my slide. I want to thank everyone on behalf of Freddie Mac. I am going to introduce Lisa Relf. Lisa is the Homebuyer Development Manager at MPHS. Lisa?
Hey everyone, thank you for joining. My name is Lisa, as Nora mentioned, and I am the Homebuyer Development at Neighborhood Partnership Housing Services. We are a nonprofit HUD agency, and I do want to mention we are actually a Freddie Mac Help Center, as Nora mentioned earlier. So if you have any clients that need some type of assistance, you can always send them over, and one of our HUD counselors will be more than happy to help them and guide them on whatever it is that they need.
Lisa, if you don't mind, I'd like to ask you a couple of questions in regards to credit. So, how can consumer credit be impacted during this pandemic?
So one thing you want to know is obviously, yes, credit can be affected. The most important thing you want to do is if you need assistance, you're having issues, if you become unemployed, you want to contact your creditors immediately. You want to find out what it is, what programs might be out there for you, depending on the type of credit it is. What kind of help can I get? But you don't want to wait. You want to definitely let them know. If you know, I got laid off today, give them a call today and find out. Definitely let them know, even if you can still make the payments, but you're not sure how much longer you can make them. Educate yourself, find out what it is that's out there so that you don't go and miss any type of payments. Okay, that's the most important thing. Also, another thing that I want to let everyone know and give you a resource is annualcreditreport.com is currently giving free weekly credit reports. So if you need a credit report, normally it's an annual thing, they are currently offering free weekly reports. So definitely share that because that's something that, you know, most clients need to know. What is my credit looking like? Stay on top of that. That's really important to find out what it is that's going on with your credit. What's showing up is something, you know, not right on my credit report. You want to take care of it sooner than later.
Can you repeat that link again?
Yes, it's annualcreditreport.com. And maybe we can put it in the chat for everyone.
That'd be great. You know, I had a question also that I think a lot of people are wanting to know. They're with Freddie Mac loans. What is the max? You can't get a $3 million loan through Freddie Mac, can you?
Okay, so we have single family division and we have multifamily. So it all depends. Unfortunately, I'm nationwide, so it all depends on state and it all depends on the type of transaction. So unfortunately, I can't answer that now, but I'll take that as a takeaway and have that answered by our policy team, and I'll get right back to you, whoever asked that question. If it's you, Lydell, I'll send it over.
Thank you very much.
You got it. Lisa, I have another quick question. So what does your agency do and how do you help consumers? I mean, as an advocate for homeownership, tell me what your role is. How do you, get in the trenches with these future home buyers?
So at MPHS, we have several services that we can offer. So we can help someone that's currently just starting out. If you have credit issues and you're not, excuse me, ready to buy, we put you on an action plan and we get you started in the right direction to home buying. If you are ready, then we take you to the next step. We connect you with partner lenders as well as realtors, and then we get you to the next step. We also offer the homebuyer education. So the 8-hour HUD approved education, we offer that. Currently, we are not offering in session classes, but we do have the online class available. And all of that information can be found on our website. But we also offer foreclosure prevention. So if anyone is in need of foreclosure prevention, we have that service as well.
Oh, that's so fantastic. I know you guys do a phenomenal job. How can clients reach out to you? What is the best way if anyone is watching, if we have real estate professionals who have clients that can use your services, if there's homeowners, what is the best way? I know we have your information up. What do you prefer?
Absolutely. So if you would like to reach me directly, all of my information is posted. My direct line is there, my email address. A lot of times it's easier if you email me, only because I do have clients throughout the day. We are currently working remotely, so we are not seeing clients in the office, but we do offer Zoom, phone appointments, whatever the client is most comfortable with, we can accommodate. We also have our website there, and if you go to our website, you can see all the services that we offer, and it can connect you as well. So as far as documentations or anything that we need from the clients, we're able to receive them by email, by fax. They can mail it in. We do have some clients that are a little old school and prefer to mail things in. So we can accommodate you any way possible.
That's fantastic.
So there's actually a question that was presented by Stan Stark, and he wants to know if there's any discussion on raising the income limit for high cost areas such as San Diego for the Home Possible product. And by the way, the loan amount in San Diego is $700,000, 105, what, 1,500, 700, $700,105,000.
Right. Well, does that sound affordable? Just kidding. You know, we know California is my state. Even though I'm traveling throughout the West Coast, the first thing that everyone asks me is, Nora, Home Possible, income limits. So the first thing I will say is I am not at liberty to discuss what is going to maybe or maybe not come out in the near future. But as soon as I have it, approved and in writing, I would love to share it with your demographic, with your audience. But what I can say to whoever asked the question is, we also have our Home One product. It's 3% down. It's for a true first-time home buyer, and it has no income and no geographical restrictions. So when I was a loan officer and I used to look up that product, it was an easier sell here in Southern California. It has no income limits, again, no geographical restrictions. Home One, if you're an agent, reach out to your lender and make sure that they look up those guidelines and they're familiar with the program. But can I tell you, I agree. I would love to see those income limits in Southern California for Home Possible. I'd like to see what they look like in the near future. As soon as I have it though, I'll share it with you guys.
Thank you. And another question, you said just now, true first-time buyers. Is it still true that they have to not have a home in their name or mortgage in their name for 3 years to become a first-time buyer still?
That is correct. Yeah, the true definition of a first-time home buyer cannot have any mortgage, financed, or title in their name in the last 3 years. So still first-time home buyer, true first-time home buyer.
And one other question from Monica. She says, what do real estate agents need to know to help current and prospective clients?
Oh, that's fantastic. Really great question. And that's my Monica from Freddie Mac. So first of all, the first thing that I tell all agents is talk to your lender. And the reason I say that is we have seen on the secondary market so many lenders add overlays to loan programs. So if you have a potential home buyer who is going through the program of purchasing a home, pick up the phone, talk to your lender and ask them, what are the overlays that you have added to all your programs? And even though you're a real estate agent and you don't necessarily have to know loan programs, what you do and what you should know is, are there overlays being added? And how is this going to affect my home buyer who's in this trying to fund this loan right now, or future home buyers? So that's the first thing. Number two, talk to your clients. Are they employed? What we have seen is a lot of borrowers go through the process and then are later saying, you never asked me if I was employed, and they're halfway through the process and that lender makes that phone call, to verify employment, and guess what? That company closed down or is shut down, or the borrower, the potential homeowner, is on furlough, has been laid off. So have major conversations with your customers. Something else, that I've seen is reserves on products that are affordable products. So a lot of lending institutions are adding this overlay, and how many first-time home buyers have additional reserves? That's the first question, that I would ask my lender. I would ask my lender partner or anyone that you're working with, is there going to be an impact to any potential future home buyer? Lisa, do you want to add anything?
No, I'm sorry. I was looking at the questions here. So
Yeah, no worries. I thought maybe you wanted to, because you deal with the first-time home buyers. So on Freddie Mac's side, what we are seeing is definitely overlays, the unemployment issue. Also, talk to your lender. Is there any overlays on appraisal? Are appraisers having any issues gaining access into the property? Will that create a delay in the future of us closing our transaction? So that's really what I would say. One last thing, interest rates are phenomenal. We have 2 posted historic interest rates in April and in May during a pandemic, nonetheless. So, I mean, is it a good time to buy? Absolutely. Our economy is on a rebound. I just presented on economic stats this morning to another group, and all I can say, it's bouncing back, but our housing economic system is doing fairly well considering we're in a pandemic.
So excuse me, the VA loan, where does that fit? Is that a Freddie Mac loan as well?
So that is a true loan from the Veterans Association, completely different than Freddie Mac and Fannie Mae. So we are the 2 GSCs, conventional conforming institutions. Then we have FHA and we have VA, managed by the Veterans Department.
Perfect. Let me see if there's any other questions. I think.
If you don't, I have a quick question for Lisa.
Yeah, go for it.
And I really quick before you go on, someone was asking in regards to flyers for realtors. I'm not quite sure what type of flyers you were interested in, but if you send me an email, definitely, absolutely, if I have the flyer that you're looking for, I will send that over to you.
And Lisa, if I can add to that, our real estate resource page at Freddie Mac offers free flyers. So we want to co-brand with you for free. Our marketing team has done a phenomenal job at Freddie Mac. So if there's anything you're looking for, please go back to the real estate resource page that I mentioned earlier. Sign in, log in, register your email address. Our marketing flyers are free of charge, and they're actually really cool looking, really, kind of, very innovative. I think our marketing team does a really great job.
So, Nora,
yeah.
What do real estate agents need to know? Oh, I already read that to you. Will I be considered for as a first-time home buyer if I own a home in another state past 7 years?
Past 7 years.
I'm not sure if that means that they've owned the house for 7 years or that they haven't owned that house in 7 years. But I think if they currently own a house in the United States, then they're not first-time buyers, but no matter what state they're in. But if they haven't owned a house in 3 years or longer, then yes, they do apply. And how is Freddie Mac addressing the forbearance amount?
Okay, so we don't give an amount. Really, it's a servicer. So remember, borrowers are not necessarily contacting us, they're contacting their servicer. So it depends on how much you owe your mortgage. That is the amount that would be negotiated at that point. So really, that's a servicer question, not necessarily a Freddie Mac question. Our response to forbearance, I kind of went into it in detail. We've created that hashtag Help Starts Here webpage to support borrowers, homeowners, future borrowers, and real estate professionals to educate themselves on what the menu of services that is out there.
Perfect. And what is an overlay on a loan?
Oh, that is a great question. Okay, so GSCs, FHA, and VA have standard guidelines, and it's basically rules or what we require to purchase loans or to buy loans on the secondary market for us to be able to say this is a transaction that mitigates risk and we'd like to purchase it. So an overlay, which is a great question, I hope it's a homeowner that asked this question, is an additional requirement that we, the GSE, are not requiring. So it's really the lender protecting their asset, protecting the risk, saying, hey, a lot of people are unemployed out there. I'd like to add reserves in case someone, loses their job in the next 2 to 3 months. Just an example, by the way. But that is an overlay. It's an additional requirement outside of what we require as a GSE, as FHA, or as VA.
Here's an ADU question. So California passed.
That's an appraiser question. Come on.
Well, maybe let's see what it is. California passed a new accessory dwelling unit laws, allowing a second unit on a single family lot to address affordability or affordable housing situation. Any efforts being made by Freddie Mac to expand use of rental income of the ADUs to help buyers to qualify outside home possible products?
Yes, the answer is yes. ADUs are a hot topic, especially in my beloved California. So the first thing I say is absolutely, Freddie Mac has an actual webpage on ADUs. Let me direct you, if you're a lender, let me direct you where to go. So if you go to a Google search engine or just any search engine, you can type in Freddie Mac guide ADU. What it will take you to is the actual web page where you can go and find the net rental calculator for ADUs, and it'll explain what type of renters we will allow income on, which I think that's really important. Now, the real question on ADUs should be answered by appraisers, but yes, we accept ADU income and we have the exact guide. And if you want to get into detail on that, an appraiser should be on. And I'm not sure if we're going to have a guest speaker on one of our future ones, but I think we're working on that. Okay.
And the last question is, someone says that they didn't quite understand your answer about VA loans. So
yeah, so
it's totally separate.
Correct. Yeah. VA, the veteran, if you're a former military, whether you're active, you're active, you're retired, or you are fully discharged, fully honorable discharge, you can go through the VA and get a loan directly from the VA office. Veteranaffairs.gov, and they are a whole nother lending institution. So I am on the Freddie Mac side, conventional transactions and government servicing agency.
So on that same thread, I personally have a nephew who just is going to be, he left on, he's either leaving this Saturday or he left last Saturday, and he will qualify for a VA loan as soon as August.
Yes.
So that's crazy. I didn't know that.
I love that. And, I know a lot about VA loans in my former underwriting days. And again, it's a very great transaction. It's really something great to see our military being able to be approved for these type of transactions. So, thanks to him and congratulations that he's able to, qualify for that loan transaction.
Does forbearance affect credit score?
Lisa.
I wasn't sure if I was muted.
Okay.
Now that's going to depend on, so as far as reporting, while you're in forbearance, you are not getting reported negatively. However, if a client was delinquent prior to their forbearance, they are still carrying the delinquency of their prior forbearance. So until that becomes current, they will still continue to be delinquent, and yes, it would affect the credit scores at that point. If the client is current prior to forbearance, then depending on the options they choose after forbearance, as long as they keep to the terms after their forbearance and continue to make the payments agreed, if that was the agreement, then they will remain on a positive.
So one of the questions I've actually had asked me personally from clients is, if I do go into forbearance, like you said, no problems, but all of a sudden they go into forbearance and they abide by all the rules and regulations and make their payments or do whatever they say they're going to do for, let's say, 3 months. If in a year they want to go in and refinance, will those 3 months show up on their credit score?
The 3 months forbearance?
Yes.
So once they're out of the forbearance, they're going to go into some type of payment program. It's either going to be put as a balloon. So if they refinance, that will have to get paid off.
Got it. So if they pay it off before, and
If
then
they pay it off before, then it's pretty much done deal.
and it won't even show up? Or will it show up as a 3 month forbearance, paid off, you're good?
No, it won't show up.
Okay. And also, if a client applies for forbearance and then wants to sell their house, will that come on will that affect them when selling the house? I think the answer is probably the same thing, as long as they've paid it off and they have a clean record with the Freddie Mac.
So here's the thing, you need to come out of the forbearance.
Right.
And when you're coming out of the forbearance, you're going to decide with your servicer what it is you're going to do next. So that being whatever choices that you're given and what you're going to qualify for in regards to what's my next step.
How soon after a forbearance can they get a refi?
3 months.
Okay. That was one of the questions as well. Can you refi? Yes, you can refinance a rental home. Yes, I can answer that one. Can you sell your house while in forbearance? Yes, but then you'll have to pay off that, whatever that balance is that's due. It's a lien, basically.
Right.
And what are the options after the forbearance?
That's going to depend on your servicer. So a month prior to the forbearance coming due, your servicer will reach out and give you the options based on your loan, what the options are. So if you don't hear from these servicers, and in my experience, every client that I've had so far, their servicer has reached out to them before they've even reached out to the servicer. So your servicer will reach out 30 days prior to the forbearance coming due.
Perfect. With that, are there anything else that you guys want to end with or add?
Lisa?
No, I'm good unless anyone has any other questions.
Let's see if there are any. Oh, yes. Can you get cash out on a refinance of a rental home? Yes.
Yeah, as long as you qualify.
As long as you qualify, yes. Are the penalties now they're starting to flood in? Are there penalties to those who cannot pay back their forbearance at the end of the program?
That's going to depend on your loan. So you'll have to check with the servicer because you will have options. There's going to be different options, and it's going to depend on everyone's individual loan.
Okay, and lots of thank yous. Great information, thank you. This was really helpful. Thank you, guys. Yeah, throughout the threads here, there's been a lot of thank yous and positive. That's good.
Lydell, maybe you can remind them this is the first of 3 series, with so much information to homeowners, to real estate professionals. We want to educate, we want to support, North San Diego, Cara. We want to, everything we can do to support and educate our real estate professionals, our borrowers, our community. That's really what Lisa and I are here for. Oh, did we lose Lydell maybe?
I think we did.
Oh, okay. Well, if you guys don't mind, do you have anything else to close out, Lisa? And MPHS, you guys do such a phenomenal job of supporting the community. I know you're in Rancho Cucamonga. However, San Diego is right around the corner. Are you okay with supporting our community in San Diego?
Absolutely. We're here to help anyone who needs help. So we are absolutely here. Please reach out to us, reach out to me personally. If I'm not available, if I don't have the answer for you, I will definitely find the answer for you.
Oh, thank you so much. And we at Freddie Mac appreciate MPHS. Again, they're one of our strongest partners. They're out helping us get the word out, educating homeowners, real estate professionals on forbearance, on COVID-19, on the CARES Act. If anyone has any further questions, you can leave it in the chat. We will get back to you. If we didn't get to answer your question, we promise we'll get back to you. We want to talk to you and we want to host some more webinars. So look out for our additional invites. We are going to send our exact community some more invitations. And with that, I think we're going to close it out. We thank you for attending today. And thank you so much from Freddie Mac, MPHS, NSD Car, and our friends at all of our affiliate partners, Nora, and anyone else who has joined us. Have a nice evening.
Thank you, everyone.